Good evening, everyone. This is James coming to you from Dividend Stock Talk, where we talk about dividend stocks for investing for monthly and weekly cash flow. It is 11 p.m. Thursday, August 31st, and we are here to find out what's happening this week with our dividend investing. Now, we invest in dividend stocks for a reason. Number one, they're pretty stable. We like to stick with companies that have a historical track record. They've been doing the same thing year after year. We want to make sure that they've increased their dividend payments to their investors at least a minimum of 10 years. That way we can expect to get more money for our money, more return on our money. All right, let's jump in and see what we're looking at. Let's go over to our option account. This is where we trade options against dividend stocks because we find it to be a little bit more profitable than just regular dividend investing. Dividend investing, if you didn't know, it is like over 400 years old. This strategy, buying and selling, that's the oldest strategy there is. But dividends, people buy the stock just to collect the dividend, and after a while they sell the company and then move on to another one, which is basically pretty simple if you think about it. You buy the stock, collect a dividend, sell the stock, move on to the next company. 3,500 companies write dividend checks every year. Okay, and if they're paying quarterly, that's 3,500 times 4, which is around 15,000 checks per year, per company. Well, not per company, but per year. All right, so that being said, let's jump on in and see what we're looking at. We seem to have a pretty good day with Colgate today. Let's bring Colgate up. That's the only position we're having because we got suckered into buying 5,000 shares. That sucked up all my money. All right, CL, Colgate-Palmolive. Colgate-Palmolive started off at 74, dropped down to 72 for a while. Then they explored the 66, 65 area for a little bit, making a low of the year at 63, jumping up and settling back in the 73, 74 area for a couple more months. A few months later, makes a high of 77. Now she's settling down to 71.64. Hey, that was a pretty good day today. Look at that. Now, where is it going? I mean, it is going down. The trend is down. Let's back this up a little bit. Yeah, since the high in June, this thing has slowly been going down with a slight hiccup in July where it jumped up above 74 in July. But other than that, slow downward. Or, this could be the bottom right here because you have a, bottom here, bottom down here. Now, why is that? That is interesting. What is that? Why would the stock in July go from 72 and then open the next day at 69, 72? That's okay. Beside the point. If you see right here, this could be just an anomaly, just 2 up days in a row or 3 up days in a row. Or could she still be going sideways with a little bit of downward? Why is it that every time I turn this computer on, I yawn, I get tired? That just doesn't make any sense. Or is it just the broadcasting? I have no idea. Okay, so that being said, with Colgate-Palmolive going sideways with a little bit of a downtrend, let's see what the seasonality looks like for Colgate-Palmolive. Oh yeah, little bit of a blip. See that? Here's where we are now. Here's our little blip. I'm I'm hoping that that blip is enough to get me out of the position, just at 74 or above. If not, I'll wait another week or two, because look at that. Second, third week in September, this thing starts its upward trend. So why get rid of it then? Who knows? Because the last quarter, first quarter's all up, second quarter's all up, third quarter's all sideways. Third quarter all sideways, fourth quarter up, and then sideways towards the end of the quarter. So that's what we're looking at for Colgate-Palmolive. So we're going to keep on holding on to it, because I see nothing but good stuff coming in the future. What else are we going to look at? All right, that being said, let's see who we have to look at tomorrow. Today is August 31st, which is right there. So we want to jump in 14th. 11 companies. Yes, we looked at these yesterday, and there's nothing tomorrow. Well, let's see who's trading tomorrow. All right, 15 companies trading tomorrow. As I was saying, 15 companies trading tomorrow. Let's take a look at some of them. Turkcell, never heard of them. Atletism, Heightsmeter, wow, don't even know what they do. Spirit Aerosystems, State National Companies, MTS Systems Corporation, Lucadia National Corporation, Huntington Bank Shares, Grief Incorporated, First Citizens, DTE Energy, Dine Equity, Calliers, Black Rock Capital Investment Corporation, Amphenol Corporation, and Ultra Industrial Motion Corporation. Interesting. I have only heard of maybe one or two of those. Now, every single one of these has no weekly options. Okay, no weekly options whatsoever. Now, we looked at half of the weekly options yesterday. Altria Group. Let's take a look at Altria Group. M-O. Altria Group starts out the year right at 66. Quickly dropped down to a trading range of 61 to 64. Travels several months there. Then she hits pay dirt. Trades at 67 for a couple of weeks. Jumps on up, hits a nice peak at 76, stays there for 3 weeks, then takes a hit, drops all the way back down to 70 before it goes back to where it was the month before. It makes a high of the year right around 77, 78 for the high of the year. Now this is a huge day. I mean, that is huge. Look at the volume. The volume is the line in the back, this dark blue lines. See them? This day right here, July 28th, the volume is just huge. Okay? As is the movement from the high and low. And she opened at 74. She drops all the way to 59.93. I mean, that's in the 50s. All right, so she jumps back up, ends up closing at 66, almost at 67. Where's she gone since then? Sideways and a slight down. So does that look good for us? I'm not really sure. Let's take a look a little bit deeper. Now, as you can see, the blue line seems to be going on a sideways pattern, and this is a brief downturn. But if we look at the red, which is a composite of all the past years, last year, the year before, the year before, the year before, I have mine set to look at 10 years worth of data. So that's 10 years worth of charts tell me exactly what it's been doing on average over those days. Now I'm going to click here and drag it to the right a little bit and let go. Alright, this thing is basic going sideways for seasonality. Look at that. Okay, so let's see what numbers they're giving us for returns for tomorrow, because tomorrow is Thursday. 2 days. It'll be Thursday, Friday, because today's Wednesday. Or say Thursday. I think it's Thursday. Yeah, tomorrow's Friday. Wow, here again already. Okay, what was I doing? Where are we? We gotta put the number in there. MO. Now we go 1 day. Is it even worth us doing 1 day for tomorrow? Let's take a look. 63.40. Look at the vertical. 63, 40, 78. That's not going to give us squat. 50 cents. Nothing there. Okay. Nothing on that one. Now next Friday, this is an 8-day trade. Let's see what that one looks like. 63.40. Alright, so that looks like a 10-15% trade. As long as she stays above 63. I could deal with that. Now, I wanted to point out the stock price at the moment is 63.40. You might be thinking, hey, it's pretty close to 60, 65, and I could get it a lot cheaper at the 63.50. See that? 63, 63.50. That spread is only going for 32 cents, which is very close to a 50% return. So you get a 50% return next week if this thing moves up. I don't know if that's the game you want to play. Do you want to do hypotheticals? Hey, I'll make 50% if the stock moves up. I mean, you make no money if it goes sideways. You make no money if the stock goes down. Only goes up. And it has to go up another 10 cents. Is that possible? Yeah, of course it's possible. She was down 65 cents today. You only needed to move up 10 cents. Okay, so that being said, I really don't want to do that one. Granted, I'll take the 62.5, 63. Even though it's only going to give me like a 25 or 30% return. It's, you know, a short eight days, you know. So that being said, let's see what else we got going. Okay, let's enter GIL, Gilead Sciences. GILD, Guild. Let's go check out the regular standard chart. All right, I'm going to walk away from this one. Look at that jump. Jump from 75 up to 83. I would be expected to make it keep going. And it's at the high of the year. Is it ever been higher than that? I don't think so. So the possibilities of it staying above there and that being the new low, probably not. Not a good idea. I don't like forging through new territory. You know, if it's been there before, yeah, sure, why not? But no, I'm the only one going there. No, thank you. Garmin. All right. GRMN. All right, 5150. Starts out the year right around 48, 49. 48, 49. And she drops for about 2 weeks. Makes the low of the year right here at 46 degrees. She jumps back up to a trading range of 48, travels around for a couple months, and then from there she jumps on up to trading range of 52, 53. So that's not a big range, but did travel there for a month. Drops back down. Looks for a good play through all of this mess. Okay, you get the low of the year here. Jumps up, finds a little sideways pattern, jumps up. All at the chaos. Alright, so she's ending up the year where she is now. Basically going sideways. You get support way down here. And let's check seasonality, see what that looks like. Take a look at this. Garmin. Let's see what the numbers look like for Garmin. Let's quickly check the seasonality. Garmin. There's where she is. She's going to go sideways. I like sideways because that way I'm not looking for any major action. Just wanted to move. No, I'm going to show you why I like this. Let's get back. All right. Whoops, didn't want to do that. All right. We're looking at trying to figure out what to do next. Grab that chair, put it back in, or just keep progressing forward. What are we doing? Garmin. GRMN. Garmin. Let's see if we have any interesting plays for Garmin. 5150. 50. 51. 5150. That was more for just a sense of getting it out of the way rather than trying to make a profit off of that one. Okay, so we're looking at 5150, and we can't do 5150, and we could 36. That would give us a nice little return for 1 day. That's crazy. That is just crazy. Okay, so that one right here will give us a nice look at what we are looking at. Okay, so give me adequate bunny rabbit to look at. All right. I can wake myself up here because long day. All right, what are we looking at? Looking at Garmin at 51.50. Garmin at 51.50 is paying close to that 45%. 140 out of 370. Huh. Let's get rid of that for a second, because that number just seems kind of small to me. Let's jump and look at the 50 contracts. There we go. $700 out of an $1,800 investment. 50% would be 1,400. 1,800. That's roughly around about 45%. That's not bad. Okay, but only one problem with this one. It can stay the same or go up and you'll make money. If she goes down, you're out. Where's the break even on that? 51.36. So it doesn't really give you a lot of space to move around, but it's a relatively safe bet. It's one day, gonna make 45% or so if the stock stays where it is or goes up. If she goes down, you lose. Move into the next position up, and I don't think it's where you at. See, 50 cents ain't even worth it. Won't let you do it. Okay, that's the winner right there at the money. 51.50. All right, let's get out of there. Merck. MRK. Let's check on Merck, see what that's doing. All right, Merck starts out the year right at 62, 63. Goes sideways for a bit. It's about almost a month and a half, 2 months. Then she makes the low of the year a couple weeks later at 58.21. Then a nice gap up from 60 all the way up to 64. It looks big, but it's really not even, it's not even a 10% gap up. All right. Then she's all over the place. She's testing the bottom here. Look, 58 there. Right here, you get the low at 58. Here, you get the low at 58. Didn't break the 57 mark into the 57s. Okay, 58. 58.30 seems to be the lowest it has gone. All right, so that's the lowest it's gone. But here we are, right here, right now. So let's see, because that, my friends, is a definite uptrend. Okay, this had nice volume today in Merck. I don't know why. You do a little bit of research to find out why did they have that nice volume and what drove it up. So we're gonna hit trade MRK, and let's see what Merck has to offer for one day. We got the 63.86, so we'll be looking at the 63.50, which is right there. 46. That's not a lot of money. Make a quick little adjustment. All right, 2,300 up, get 200. It's 10%. 10% return for one day. I think I could do that. Okay, so 63.5. Now that's quite a bit, because she's at 63.86. Okay, so this position right here would give you about a 10% return for one day, as long as the stock stays above 63.50. And it could very well, you never know. I mean, it is a definite uptrend at this moment in time. Okay, see where she is? She's going sideways. The last 90 days. That's the last 60 days. She hit a high here, she drops, and then she just goes up and up and up. You never know. could have more movement because that is a nice little uptrend, just the way it's looking. Back to Market Watch. Macy's. Ugh. Lost a lot of money on Macy's. Well, not really. It's just tied up a lot of money for quite a while. Macy's started out the year at 36. Okay, trades at 36 a year for 2 months, then jumps up to the high of the year at 45. Been going sideways for a little bit. Now she's going down, down, down. Looks like a stair step down movement. See? Step, step, step. So let's see if we have any good trades on this. Macy's. Macy's has been around for over 100 years. I mean, it's a good company, but they are a retailer. Retailers get hit hard by the internet. The internet, I mean, a point in fact today, my brother-in-law and me were driving around today, and he said he needed to get a phone case for his phone. I said, well, why don't you just go to the dollar store and pick one up? Because they have them. I don't have them for my phone special. It needs a special one. So he was going to take the trip, which was like a 45-minute drive one way, 45-minute drive back. Then you have to deal with the people and the conversations and the traffic. Long story short, get out my phone, order it on eBay, $6, delivered to the house. This way, why am I going with that? Macy's is a retailer. They sell products. Okay, people can stay at home, the comfort of their home, and do their buying and selling of what they need for the most part. You know, I still go to the stores because I like to interact with people. Other than that, I really don't like shopping. You know, I enjoy grocery shopping because I get to interact with people. Because, you know, working online all the time, you don't get to interact with people. So it's a social misfit. I don't know. All right, so Macy's seems to be all over the place. But, you know, since May, she's going sideways in the 23 area. Now she's dropped down to the 20 area, and she's going sideways in the 20 area. Okay, she's just closed at 2077. We look at the 2050 and 46 at 6 cents. I don't know. Would 6 cents even be worth looking at? Quickly look at 500. Okay. Now this is another interesting move or interesting trade. 50 contracts is going to cost you $2,300. The maximum you can make is $200, which is a little bit less than 10%. Okay. The break even is $20. $20.46. So you can move with the max profit to any place where you can set up shop. You know, just get someplace and make a few trades. There you go, 10% trade right here, Macy's. Buy it, 50 contracts, 23.76, and the maximum you can make, no matter what happens in the stock market, no matter what happens, the stock can go through the roof. It can go absolutely nowhere. The most you can make on a spread trade is the difference between the purchase and the sale price, and that just so happens to be $2.50. So you take a good look at that, and you have to think, can I make something good every day, or do I just have to go out and buy it? All right, that being said, I'm going to be out of here. So let's check and see if we have any questions. Questions first. No questions. Come on, guys, you got to hit me up about a question so we can get this thing rolling. All right, so we showed you a few trades today. We showed you Macy's. What's this one? Altria. Garmin was a good one. Gilead Sciences. We looked at this one already. That one had a good trade in it also. Anyway, rewind the video. Watch the couple of good trades that I pointed out for the 1 day return, 10%. 10% is not bad for 1 day return, depending on how much money you want to put in. You know, you put in 100 grand, 10%, $10,000. Okay, whatever. All right, this is James signing out for Dividend Stock Talk, where we talk about dividend stocks for monthly and weekly cash flow. You guys have a great day.